Hey guys, this is Randy with Right Side of the Chart. I know I just did a video analysis on the commodity ETNs the other day, so this one will be quick. I just wanted to reiterate these things are really firming up here. In fact, I've seen a few things in recent days or last week or so, or actually over the last few weeks, really, that indicate we could have a bottom, at least a tradable bottom. And again, I don't care about catching the entire trend. I'll certainly be positioned that way in some of my long-term accounts. I think as I've been saying for a while, commodities are, at the very least, the risk reward is minimal. So I don't mind parking some long-term funds and long-term accounts and then swing trading these. So the two can be mutually exclusive, is what I'm trying to get at. But here's what I wanted to cover. Just a few of these that stand out. I won't hit them all. Here's sugar. We put this one on as official trade the other day, and the common theme here is stop raids. I've been trading a long time. I know what they look like. I can smell them when they come. Sugar was certainly that. Now, I can't tell you with all the degree of confidence. I knew that it would be a stop raid. My stop was placed strategically, but these, especially commodity markets above anything else, it's much easier to manipulate for the big boys, those with money, than something huge like Apple that has, one of the largest or the largest market cap in the world. So here's my point. This was a stop rate. There was a very objective place stop. There was a bull flag, a breakout. It looked legit, sucked a lot of traders in. And the powers that be dumped sugar, took it down, ran the stops, made that bull flag, foiled that, and then boom, gapped it up. And again, I mentioned this in the trading room. Keep in mind, sugar trades, sugar's futures trade on the London exchange, London hours. They trade on the U.S. exchanges as well. They're futures, but they trade via London hours. So you'll notice on SGG, and I mentioned this in the trading room to somebody the other day, that SGG flat lines here. I'll go to a 1 minute chart after 1 p.m. because that's when most of the sugar contracts stop trading. So if you go to any chart, you look at 1 p.m. And that's when trading stops in the sugar futures. So then again, SGG isn't going to do anything every day after 1 p.m. Just an FYI if you're trading this one. And that's also the reason it gaps, because then it picks up trading overnight when when the exchanges, when the futures start trading again and the U.S. markets close. So therefore, you're going to get these gaps up and down. Okay, so again, don't read too much into the gaps. That was just a reversal. You would have seen it on futures happen overnight. But point being that here we are. We're challenging those previous reaction highs. We've wiped out all of that, those 2 days of bullish candlesticks in just a couple days, 3 days here, it looks like. Not my favorite, but I still think it has a chance to hit those targets. Some of the ones I really do like, and I mentioned this yesterday and quite a bit, NIB. You look at NIB down on support. You can buy it here on support. That's what I've done. And this one has a little bit of a downtrend line. Let me move this out of the way, get you a downtrend line here. Not crazy about it, a few reactions, but let's watch that. Let's see if that gets taken out. And of course, the overhead lines are resistance levels. And then, as I already covered in the video the other day, here's the big story. This is just a big fat basing pattern in cocoa. You can trade the futures if you want. I cover the ETFs. Again, I've said this many times because the majority of traders trade those. You go into sugar contracts. I think it represents, SG sugar number 11. I think is like a $60,000 something contract each contract. And some traders don't have that money or don't want to have that much exposure. Even if you can, the contracts are leveraged. You don't have to put up 60 something thousand. You only have to put up a fraction of that. But the move will represent, a $60,000+ investment in sugar. And some traders just maybe want a smaller position. They don't want that much exposure. So again, these are why I cover these ETFs. And I've talked about this in the past. Somebody once brought up that they track Harbel. And I said all commodity ETFs are not equal. The natural gas ones are notorious because of the certain unique, things that affect natural gas futures in the ETFs to try to track them. Oil, USO, things like that. They don't do a great job. But overall, on balance, these that track the agricultural commodities do a decent job. If you don't believe me, just go to their websites, and most of them will show you how their ETF or ETN has performed against the benchmark that it's tracking. So there it is. There's cocoa. looks good again, and you know, now it's popped up a little bit since I mentioned it. I mentioned it down here the other day. If it pulls back again, you buy it there. Allow for a little bit. They might want to run the stops as I talked about, maybe take it down, but maybe not. You know, it's already tested that level numerous times, and the commodities are starting to catch a bid. You know, here's my commodities watch list right here, guys. You can see green across the board on a day that the markets are up. I'm seeing institutions moving into these things. This market, I wouldn't touch it with a 10-foot pole. I don't care if the bearish case was, you know, chipped away quite a bit today in QQQ so far. We'll see how we close with an hour to go. You know, as I mentioned to somebody in the trading room right now, you don't have to trade the markets. You don't ever have to be in the stock market, long or short, the indexes. Trade what's hot. Cannabis stocks right now are popping. I did a video on those that'll be out in a second. Commodities are moving up, certainly look to be bottoming here. A couple more we'll cover. There's JO. That one we had a notorious stop run there. I've already covered this in a video, and boom, looks good. Already now hit my first target. So look at that powerful reversal. That was a flush out move, very powerful. I liken that to the flush out move in GDX back in early 2016 when it dropped below, I think it was 13, a very well-defined support level, and then regained that level and then took off. So there's coffee, looks good, challenging that downtrend line as well as a horizontal resistance, which was my price target before. And if it pulls back, which it may or may not, these are the additional targets. So I'm going to skip oil, I'm going to skip coal, natural gas, I'm going to skip timber. I told you timber. They'll yell timber, or timber will come down when the market comes down. That's my opinion. I think there's a pretty high correlation to especially the real estate market with timber. Cattle futures, they're ready to break soon. That's one, you know, one of the ag ETFs. But again, that's almost inverse if you think about it to the grains. They got to feed the cows grain. Grain prices go up, then the cost of the farmers goes up to feed their cattle. So that one I'm bearish on. Not yet. Sell signal's not there yet, but maybe soon. And then let's see, what else do we have? DBA was the ag ETF fund. Looks to be flagging right here. Look at this. Nice little flagging action. Strong move up. Consolidation. That's the essence of a bull flag. And should it play out, you know, as technical analysis would project, this is called the measured target. You just take the flag pole, which is the distance leading up to the flag, add it to the lowest point. I would favor, instead of the flag projection, I'd like that $21 level. I see that's nice resistance. So let's just say that would be my preferred swing target, 21. And again, you want to see a flag, couple things you look for in a flag. You want high volume leading up to the flag, which we had here, above average. Then you want to see volume diminishing heading into the flag. We've seen that recently. You can see the volume going down the last few days. Then you want to see volume expansion on the breakout of the flag, an impulsive price move, impulsive price action, similar to what led up to the flag. If you don't get that, then you may have what we just had in sugar, which was that failed bull flag breakout, even though that proved to be just a quick whipsaw move. I think it was orchestrated, but who knows. Anyways, here's corn. Corn has this big old basing pattern here. I mean, that thing goes back for a year now. And, you know, you're close to the bottom of it. Or you were the other day when just yesterday, I should say. I did the video a couple days ago. I think we were actually at the top. Yes, if I'm not mistaken, we were at the top. And I said that's when you don't want to be going long. If anything, you want to book profits or wait for a breakout. Hit that target, bounce back resistance, bounce back, came back down almost all the way back to the bottom of the range. So there was your objective entry. You know, if you're trying to catch every last penny, I don't recommend it. You would have waited to 1850. Usually I'll step in. If I'm going to buy, I buy above support. If I'm going to sell, I'll sell just below resistance. So we're now somewhat in no man's land. We're still towards the bottom of the range, so you could go long there with the stop not too far below, wait for another pullback, or wait for a breakout above $20. Actually, that level, yeah, it's right at 20. Here's wheat. Wheat, there it is. Again, I mentioned that the risk reward just was not attractive, and you know, may have virtually hit, came close enough to my long-term target there, and pulled back. Now you're at the first. This was the third target on that last trade, which was successful. We hit all three, and that's resistance. I'm sorry, former resistance, which is now support. That's the 770 level. So look at this. We're at 773 today. It looks like we pulled back to as low as probably right around 770 or a hair below. Yeah, low was 767. So you could buy there. And if it gets here, and I can see that possibility, maybe it comes back to 738, maybe not. That would be, actually that line's at 752. There's a gap right there. So I'm between 752 to 742. Don't want to see it go below 742. In other words, you could start buying here. You can add down to, but not below 742. But this one may have had its correction. I mean, this is a pretty decent resistance level, and that's why it was my final target before the final official target. That was the final long-term target. So this one could turn around and rock. SOYB, soybeans. You know, we already covered it. Explosive rally after the wedge breakout, came back in, and you know, the ideal buy point, if it gets there, would be right here around the 1850-ish level. May or may not get that far. If it does, that would certainly be an objective long entry with a stop not too far below. There's a gap there. You could also use that as a stop level if it gets into that gap. Or if it gets that far down, you know, the bullish case would still be intact. This thing ran up so much, and the breakout was way down here. It could come back all the way into this and backfill that gap and still very much keep the bullish case intact. Hard to say. I'll study the intraday charts. I haven't done that today. I'll look at the intraday charts. But these reversals can come anywhere now because we've already had a healthy pullback. And it's really a matter of how much the momentum players step in here and buy. You know, that's one thing about commodities. When they're hot, they're hot. And when they're not, they're not. You can see here. When they want out of grains, boom, here's the grain ETF. Fell like a waterfall. When they wanted in, it was going up like a rocket. That's just the nature of the beast. So this is JJG. There's your levels. This one's pulled back to almost perfectly. Look at that. I had that horizontal line there. I haven't touched this line in, you know, well over a month. Line was created back on, you know, at least a month ago. And that's exactly, almost to the penny, where we came down yesterday and tagged it. So there was your re-entry point on grains. Either entry if you didn't catch the first advance, or a re-entry if you were long, you took some profits there at that previous reaction high, and you go back in here. That's swing trading. That's what differentiates swing trading and investing. Investing, simple. Or trend trading. You take a breakout or a back test, and you're in it for the long haul, and you're going to ride out these rips and dips. Swing traders, if, you know, using the charts, you can capture the rips and dips. Go long, go short, go long again, and you magnify your gains. You'll more than double your gains, you know, if you can capture. And it's virtually impossible to capture every little. It is impossible to capture every little rip and dip, but I'm talking the major trends. When you see something become extremely overbought here on the RSI, you probably had divergences on the 60-minute and all that. That warns you that the risk reward is not that good. So if you're a swing trader, you book profits. If you milked a, you know, 10 whatever percent gain it was in those. And finally, no, that's it. That's the last one. Okay, keep this short. I just wanted to cover those grains. And again, the reason I'm doing this video so soon, just on the heels of the other one that I did earlier this week, is that the charts have played out that fast. I mean, here we were a week ago. We were up here at resistance, and I was warning that the grains were, you know, getting probably due for a correction because they were at resistance and overbought. And we got that correction in just a couple days. So, you know, you have to adapt your trading to, you know, what the markets present you. We could have consolidated under there. I think I might have mentioned that. I probably did as one of the options. Maybe we consolidated under those resistance levels for weeks or months. And you guys have probably heard me say this before. There's two ways for a stock or a security to correct: time or price. And you can also have a combination of both. In this case, it's clearly a correction in price, very little time. A correction in time would look something like this: back, forth, consolidation, and then boom, finally a breakout. So we have our correction, which certainly alleviates and worked off those overbought conditions. You know, proof of that, that's not just a subjective term. You can look at the RSI. When it's above 80, you're overbought. Now we're already went right down from 80 back to the 50 level. And the 50 level often, not always, but very often on a lot of securities, acts as support or resistance when tested from above or below. So if you're in an uptrend, quite often you'll see pullbacks to the 50 level on the RSI, and then the uptrend resumes. In a downtrend, bounces up to that 50 level or often cap and advance, and the downtrend resumes. So there are periods, of course, where there's choppy sideways consolidation like this, and at that point, the indicators and the oscillators, including the RSI, they just don't work well. So what I do is I don't pay them much attention. That's why I sit back and I wait and I look for things like divergence with clear separation in the PPO or the MACD, divergence on the RSI, and this is, you don't want to trade this. These sloppy sideways trading ranges just grind traders to pieces. Frustrates you if you're a long-term trader investor, and it's frustrating if you're a swing trader, because it's very difficult to really time your entries and exits because the charts aren't that clear. All right, we'll leave it here. Anyways, I like commodities right now, and I have another video coming out on the cannabis stocks soon. This has been Randy Finney with Right Side of the Chart.